The agenda for today, I'll spend some time putting a frame around what I mean by right-brained risk, drawing on some research and work that's been done by a well-recognized philosopher, neuroscientist, and scholar. Frame that in terms of how we might apply that and think about that with regard to risk management as it's practiced. Reflect on the turbulence, uncertainty, novelty, and ambiguity in which we operate. Uh, give some thought to how we apply that type of thinking by looking at some examples of right-brained thinking in what we'll consider to be a very volatile world, and then summarize that with some key takeaways for managing risks. I will make the point several times during my presentation, but when I refer to right-brain risk, I'm thinking in terms of individuals themselves, teams, and organizations. And so as I step through, and certainly as you consider any questions or observations you might have, think yourself in terms of you as an individual or your colleagues operating as a team with other teams or as an organization. Start with a little bit of a provocation here and ask you as I proceed in step
Susan,
function
you need
slide.
to share your presentation.
Am I not sharing?
Oh, you're not sharing it now. It must be open. So you just I have already given you permission.
Share again.
Yeah, okay.
There
We
we
are
go.
there. Okay. Thank you.
Okay. So I'm a little ahead of myself here.
That's all right.
But
The
what I'm doing
monologue
is
the monologue
unfolding a
was
picture here
perfect.
and asking you to consider what it is that you see. As I add to this, some of you may recognize an Impressionist painting. This is Monet, 1870s. It's haystacks. In fact, Monet, in this case, as well as with many of his subjects, revisited those subjects over seasons and times of day and gained different perspective, whether it is in warm summer, cold winter, spring, or fall. Manet was not alone in his interest in this subject. This is actually a Van Gogh that represents similarly haystacks. So I use this as a table setter for you to consider perspective. Uh, when I talk about right-brain risk, I am drawing on the work of Ian McGilchrist, Dr. Ian McGilchrist, who has written 2 books over the last 10 years. One widely followed, Master and His Emissary, which refers to the divided brain in the making of the Western world. Dr. McGilchrist, as I mentioned, has an extensive background as a neuroscientist, a philosopher, a psychiatrist, working clinically with patients. He's followed that work up with a subsequent publication called The Matter with Things, Our Brains in the Unmaking of the Modern World. As Dr. McGilchrist's thesis that we have, in fact, 2 sides to our brain, and we have been over-exercising the left side of the brain at the expense of the right side of the brain, which brings things fully into the round and into the whole. Now, those of you who have done any work will know or consider the concept of left brain and right brain as maybe a thumbnail or a caricature. But Dr. McGilchrist's work, which is extensive, these books run hundreds of pages, looks at brain asymmetry in great detail with clinical and scientific studies that have been done, as well as general observations around philosophy, history, human affairs, and has looked at this brain asymmetry and is discriminating in a much more detailed level. And I think it's germane for us as risk specialists or in the related functions to know and understand this, because in the end, Dr. McGilchrist is asking us to know and understand how do we attend to the world. And very much it is the case in risk management, audit, compliance, legal, certainly economic and finance functions, the nuts and bolts of business and operations, getting things done, technology, that are very much focused on a analytical mindset, measurements, precise and good understanding at a level of detail. And to the extent we exercise that expertise and are able to deliver that as a team or as an organization, These are metrics that we can measure and feel comfortable with. For risk management professionals, very much the case when we're using our tools and methodologies, we are trying to quantify and or bring to great detail to observe and understand for the organization what risks exposures are to the extent they can be quantified at the gross and the net level to the extent we've mitigated them, and arrive at some precision, often represented by a risk matrix and probabilities, a quantification of potential financial exposures across a number of dimensions. By introducing the concept of this brain asymmetry and right and left brain risk and drawing from Dr. McKilstriff's work, I'll argue that that methodology that's so widely accepted and used across the business world and in nonprofits and government agencies is erring on the side of the emissary. That is, overemphasizing the left brain, representing, as he said, with narrow focused attention, very reductive and analytical, based on propositional procedures, language and math, model making and utility. The left brain, in a sense, representing the world and modeling it and expressing a preference for what it knows or it can know. The right brain, in contrast, is on the lookout, if you will. It's broadly attentive and vigilant, taking a holistic and nuanced view, as much participative and perceptive, the use of metaphor and openness, and a comfort with ambiguity and the unknown. The distinction between risk and uncertainty is something we often will look at as professionals, and to the extent we can define risk, and certainly in finance and in the financial markets, precise decisions and quantification of risk is extremely well defined across asset classes, across time, and so on. We sometimes lose sight in our terminology of conflating risk with uncertainty. Well, certainly the right-brained approach is one that says we can get hung up in the risk and the uncertainty, but we need to know and understand that ambiguity and the unknown are something that are the nature of the world in which we operate and do business. So as I suggested at the top, whether we're thinking as individuals, teams, or organizations, we really need to be asking ourselves with a sense of self-awareness, to what are we attending? What is it that we're paying attention to, and how do we perceive? To what extent can we know and understand? Are there narratives that we create or that we take in that others are providing to us? This is very much the case, certainly in the financial markets, more broadly as we reflect on the public arena. Then, as an organization, individual, or team, how do we respond? And what is it that we do, or how do we choose? I've illustrated this again with an homage, if you will, to 19th century art by going back before Monet to J.M.W. Turner's work, who was quite revolutionary over time in his use of watercolor and color, this representing the fire at the Grand Storehouse, as a reflection of what ended up being a long journey from a very precise and realist representation provided previously in the arts to something that became more abstract and challenging. Now, to be more specific about the environment that we're in, and it's interesting, this has gone through a number of evolutions in the last few months as I've thought about what I might represent to make the point about turbulence, uncertainty, novelty, and ambiguity as being the nature of things. This tuna framework comes from a book written by Oxford professors who have a program called Strategic Reframing. It's an Oxford-based scenario planning approach. I highly recommend that book. It does a very good job of looking backward and reframing and looking forward. Very useful tools. But this terminology of tuna is one that I've taken from them. And as I've represented here, where we go back to 9/11 or the Lehman Brothers bankruptcy in September of 2008, the unexpected and beneficial boom in shale oil, which to this day continues to grow, taking the United States from a dependency on imports of oil to the largest exporter of oil of over 13 million barrels a day now. Certainly the COVID experience, Ukraine, and then for our folks in Chicago, another positive statement here is the surprise around the Cubs back in 2016 with spring training just in the offing. It's good to think about the fact that good things can happen in an environment of novelty and ambiguity as well. Turning to the financial crisis as my first example, and I'll have several here, I will argue there's a theme I've tried to represent in these examples, and that is third parties or counterparties to whom we have exposure, and understanding that exposure may take a variety of forms. It may be operational exposure, it may be technology and privacy data related exposure, it may be, in fact, direct monetary exposure. So as a jumping off point, the financial crisis in 2008. Here I've represented some of the major figures. For those of you who are younger, this will be a prehistory to you. We have here representatives from the banking industry, as well as government officials, including our Fed chairman, our then Treasury Secretary, and ultimately as follow-on Treasury Secretary, as well as the chairman of Lehman Brothers, Washington Mutual's chair, and Merrill Lynch and Goldman Sachs represented as well. They were among the major players in 2008 around the global financial crisis, which arguably the early signs emerged in late 2007. Bear Stearns taken over at the Fed's request in the spring of 2008, but a rapid cascade, particularly in the wake of Lehman Brothers' failure. In late 2008 into 2009 and 10, reflecting back on the financial crisis, we end up, even to this day, as I listen to professionals talk about what happened and why, who's to blame, I'm still in a position of asking, and we should ask ourselves, have causes been identified, or are these narratives? In the case of the financial crisis, there was a direct inquiry at the request of Congress, extensive investigation of the roots of the financial and economic crisis, more academic work done, I believe, out of MIT, if I'm not mistaken, on physics envy and the excess of quantitative modeling and the overconcentration that was not observed because of that heavy emphasis on use of quantitative modeling that blinded risk teams and businesses on Wall Street to their exposures. And finally, Bethany's work, which was a New York Times bestseller, on the actual players, if you will, and the organizations and some of the dynamics, including the politics within organizations. So I offer these three as an illustration that even in the wake of the financial crisis and arguably today, we're still going back over and saying what happened and why, who's to blame, and so on. Notwithstanding that, Dodd-Frank is legislation that made its way and today still has an impact on the investment banking industry, commercial banking industry, and other aspects of the financial system that are consequence. So while we may argue over causes and the narratives associated with them, there are often real consequences that to this day shape the lives of risk professionals, compliance, legal, and audit teams, as well as their colleagues that they're supporting in their organizations in finance. As another opportunity to provide an illustration, I will walk through the experience around Wachovia Bank's potential collapse and whether or not one might have foreseen that in 2008. And start with April of 2006. For those who are familiar, Wachovia Bank was a large regional bank out of the Southeast, the byproduct of several mergers, very well known for its strong customer service. The stock peaked in capitalization in April of 2006 at some $90 billion. And a month later, Wachovia undertook the acquisition of one of the largest mortgage finance organizations in the country, mortgage banks, Golden West Financial. By June of 2008, just 2 years later, the CEO had to resign. The question is, why did the CEO resign? Well, in July of that same summer, Wachovia announced a loss of some $8.6 billion and a cut of its dividend. The dividend cut is not something that is taken lightly. It was at that point, working for the organization I was working for, I started to raise the question of whether or not Wachovia, as our banking partner, potentially might fail. Now, you think about 2008, there was no precedent for a large bank failure on this scale. We were fortunate enough to be able to put together a SWAT team across our operations teams that were touching the deposits and flow of funds through our customer accounts on a daily basis, and step back over a period of weeks to gain an understanding of where we had exposure on a daily basis, overnight, and during the day. And that exposure was substantial, as it turns out. And even going into September 2008, we perhaps had not fully understood and appreciated the extent of that exposure. In fact, Lehman Brothers failed on September 15th of 2008, and that accelerated the crisis. By the 26th, which was a Friday, I think I get this right, yeah, a Friday, there was a silent run on Washington Mutual. Washington Mutual ultimately ended up in the arms of JP Morgan. And on September the 30th, which was a Monday, excuse me, the 29th was a Monday, the 30th would have been close of quarter, it became clear that Wachovia was teetering near failure. Initially that week, the Fed and the Treasury Department were working with, rumored to be, Citigroup, which was similarly weak, to see if they might merge Wachovia and Citigroup together. Within a few weeks, as you can see here, as I've represented, Wells Fargo stepped in with TAF funding, that was funding from the Treasury as a temporary capacity, to provide an additional $40 billion in capital to cement the merger between Wells Fargo and Wachovia, which then proceeded in the ensuing months. In fact, in December of 2008, the board of directors of Wachovia acknowledged in an 8F filing that they believed the bank would fail in the summer of 2008. Was there another sign potentially, and this is the right brain risk side of things, was there a sign, in addition to the very public resignation of Ken Thompson and the cut of the dividend and the loss? Yes, there was a sign, and that sign was in May of 2008, when quietly the announcement was made that Wachovia had hired a new chief legal officer. Looking into her background, we were able to ascertain that her specialty in private litigation was to protect boards of directors from shareholder lawsuits. This prior to the announcement of Ken Thompson's resignation. This was a red flag. Another red flag in August was that the CFO resigned and that Wachovia was having difficulty filling that job. So I offer this as an example. One did not need to go very far deep into the financial statements or the disclosures in the 10K filings or the 10Q filings. There were other signs, and to the extent you opened your view and your understanding and your peripheral vision, there were other signs and signals to suggest that something that had not happened before could possibly be happening, and an opportunity to understand your exposure and mitigate that risk. This is the third party or counterparty. On the other side of things is technology risk. Many financial services firms, insurance firms, and certainly other technology firms more broadly outsource to India and have for a long time to very well-established multi-billion-dollar outsourced providers of IT services and support. Commonly, those exposures involve critical support to development, operational processes, IT support that are crucial to day-to-day activities downstream. Oftentimes below the waterline, those firms have access to client data and or present privacy risk. They may as well present vendor concentration risk. Knowing and understanding that as third parties or even having fourth party exposure. I have represented here a map with a circle around the North Capital region, a specific part of the national capital region, excuse me, the NCR, National Capital Region of India, for a very specific reason. First, a consideration, as some may now be more apprised and aware of the vulnerability of submarine cables after what happened in the Baltic associated with Ukraine and Russia. But equally, it's important to consider coming out of India exposures that you might have and know that there are two major points of departure, if you will, out of India, out of Mumbai through the Arabian Sea, up through the Red Sea, and Alexandria through the Mediterranean and up to Europe and to the Atlantic, or alternately off the east coast of the Indian subcontinent through the Malacca Straits, and then rallying either through Taiwan, Japan, and/or Guam. To the west coast of the United States. So the extent that you have or rely on, or you have third parties who rely on support out of India, it's helpful to ask the question, do we have redundancy? If there's a problem coming out of the west of the Indian subcontinent, am I protected by alternate cabling, either through alternate providers in that direction or off of the east side? There are milliseconds of transit time, but there's no substitute for having that backup. Back to the National Capital Region, we can recognize that the Indian subcontinent is quite active geologically. That represents, of course, the Himalayan mountains. I've represented here, and I apologize you can't see it well, but in the red area in that north are high risk zones for a catastrophic earthquake. I've specifically highlighted Noida here. It's in the National Capital Region along with Gurgaon and broader New Delhi. And if you will, we spent some time looking at disaster planning, and it turns out that Noida has soft soil, what's known as soil prone to liquefaction, being in a river belt with soft soil and high buildings. And the disaster planning lead, in looking at it as a seismic 4 zone, noted that earthquake risk was significant and that high magnitude could strike at any time. This is a representation of what traffic might look like in Noida on any given morning as commuters are making their way through the region to get to their employer. And I mentioned the term liquefaction and soil liquefaction. That's a particular kind of earthquake risk. Don't think so much in terms of fault as literally the soil liquefying. And this happened in the United States, actually in Oakland, California, during a World Series game in 1987, I want to say. It might have been 88. Very vivid. This is the Bay Bridge collapsing, as did many buildings. Certainly the loss of life was significant, but I would draw that comparison and encourage those who have substantial exposures in India or think in terms of geographic exposures to draw the lens back and understand that that risk of a third party and all the controls you may have in place around data access and security extends to a business continuity and business resilience risk, and that risk may come from another number of different directions. So taking that different angle and that different perspective. Again, to turn our world a little bit in a different direction, much more forward-looking, and that is to take a view certainly around China and the geopolitical risks that are often discussed and the concerns that we might have. And here I'm taking advantage of Rhodes Cartography, which does an excellent job of presenting maps that really prompt and prod us to think differently. Here we're looking at the East Asia and the Pacific from the standpoint of China, if you're in China, and you see what's known as that first island chain and the subsequent island chains, and the sense of confinement becomes more significant. You can see now the Malacca Straits there on the right-hand side as well, the very narrow straits with the access to the Indian Ocean, which does include those cables. There's much talk about the potential of risk of invasion on Taiwan. I'll certainly not calibrate to that, but I found this map interesting as well. We're now back looking, if you will, with a turned map of what the cartographers have done is they have superimposed France and the Normandy coast and the south of England and the Normandy invasions, the embarkation points and the flight paths for the invasions, now representing the coast of China to the northwest coast of Taipei. So you can see that amphibious invasion, this is the scale in which they would operate. It is massive and massively complex, and certainly there's much to commend and read about this and complexity and challenges. But it also raises, I think, and illustrates at a level that perhaps reading 50 and 60-page documents don't quite illustrate as well as the point here. Now let's look at Taiwan and consider supply chains and flip our map around again and understand that Taiwan Semiconductor, TMSC, which provides the fabs for not only the major manufacturers around the world, but important NVIDIA prominently, over 90% of the chips. We're seeing here indications of their fab locations for 12, 8, 6-inch, and now smaller. And based on the geology and the geography of Taiwan and access to water, those facilities are on that west coast and concentrated in areas where there's access to water. They're also high population areas. So the exposure is significant if we twist our maps around and understand that Taiwan Semiconductor, by extension, Taiwan and the supply chains, and ultimately the defenses for Taiwan and any potential threat from China, the risk is immediate and significant. So a contrast to India, but similar in the sense that a physical exposure and a digital exposure, as understood through third and fourth parties, is significant and something to consider. And I'll flip back now to the internet. And now we see a representation from telegeography of its submarine cable map. You can see that concentration down in Indonesia through the Malacca Straits, coming up to China and Taiwan, and ultimately up into Japan. That nexus, if you will, in the lower right-hand corner is Guam. So a lot of the service back to the United States, to the West Coast, whether it's Seattle and Oregon or down into California, is either coming through Guam, through the eastern side of the Japan, or Taiwan itself. My last example, much more current, and I did have to update this section over the weekend as there's much going on. Some of you may be too young to know of the direct experience of the disintegration of the Balkans and Yugoslavia and the wars that occurred in the 1990s. Ethnic disputes between Serbia and Kosovo that date to 1998 and the settlement started to flare up again in 2022. In the upper right, you see a confrontation between Serbs in in Kosovo with UN peacekeepers, including, I think, some 400 peacekeepers. There are some American troops among that multinational UN peacekeeping force. Just a couple of weeks ago, the Serbian parliament was a point of controversy to the point that the opposition party flung smoke grenades and tear gas in the parliament. This was just a couple of weeks ago. Some of that around the controversy around Kosovo, which are Kosovo has ethnic Albanians who are Muslim. The Serbs in conflict as well with their neighbors in Croatia. So this area, Serbia, remains an area of concern. In fact, over the weekend, and you may have seen online, a massive demonstration involving anywhere from 500,000 to over 1 million demonstrators protesting against Vucic's government. Vucic has been in power for a number of years. as I've understood and researched the roots of these protests, while they started around something known as the Novi Sad tragedy, which was a railway station just brought into service some months ago, where a canopy collapsed and some 15 people who were looking to board or on those trains were killed and others in serious condition. Subsequently, the Serb government acknowledged that there were challenges with corruption. A number of ministers have resigned, and the alarm about corruption and the desire for more action to be taken has spread extensively. The Belgrade government did attempt to block roads and railway and transit access into downtown Belgrade over the weekend, and the magnitude of the protests are significant. I bring this up because, yes, Serbia and Kosovo have their challenges, and certainly that would be of concern. But more broadly, as we look at disruptions in that region, we need to know and understand that these disputes go back, in some ways, hundreds of years, that Yugoslavia as a nation was able to weave things together, and that things weren't fully settled in the 1990s. And it's important to keep an eye. Why keep an eye? Well, certainly, if you look at the map and draw back and look at Eastern Europe, you see Serbia, which is represented in pink in the lower left-hand corner, with Croatia, Kosovo, Montenegro, Bulgaria, and Romania on its borders, as well as Hungary. Ukraine not far away, and Russia not far away. Importantly, there are over 1,000 companies that Russian nationalists have set up in Serbia since the Ukrainian invasion. In fact, by August of this last year, hundreds of businesses owned by Russian nationals, many entrepreneurs in Serbia, as well as Western firms. Many of these firms are in IT and providing IT support. Western firms are there as well. The talent is there without question, but many organizations, in the wake of the sanctions that the West implemented against Russia, have fled to Serbia. So in terms of supply chains and support around IT, it's important to know and understand whether or not you are working with a firm that is either relying upon through legal entities or directly themselves entities in Serbia that are providing IT-related development support and/or applications. Serbia is a member of the EU, but it refuses to impose sanctions on Russia. In fact, it was an open door for Russian nationals to come to Serbia. There was very, very little that was required of them, hence the substantial move of many. These companies potentially are in a position where Russian companies could retain access to Western markets and circumvent any restrictions. There is, as I mentioned, this potential conflict between Serbia and Kosovo, and potential Russian intervention to support the Vučić regime. The Vučić regime has certainly rattled the cage of Kosovo and has been aligned with the Russian government. There is an open question on whether or not you as an organization or your third parties or fourth parties may have elevated risk as a consequence of being a US or an EU customer, exposure to sanctions, evasion, and regulatory compliance, data security, and business continuity risk. So I'll step back and suggest that whether it's the example I provided from the financial crisis, reflections on the multifaceted exposures that India might represent for all the strengths and protections, policies and procedures and controls that you may have in place, swinging around to China or back to a locus of conflict that extends beyond the Ukraine-Russia war to much longer histories, that it is important to take a more of a right-brained approach, step back, look, and gain a broader perspective. I could go on with other examples, but I think suffice in summary to say that whether we're looking at the grid of the New York, this is the Chicago skyline flying into O'Hare, actually, whether we're looking at that grid or we're looking out toward the horizon, that turbulence, uncertainty, novelty, and ambiguity are absolutely here to stay. that digital and physical domains are integrated, and it's important whether you're operating on your own, as part of a team or an organization, to continually ask your question: are we having left and or right brain takes on this? And to what is that take, if you will, affecting what we apprehend, what we know and understand, how we think, and how we respond? It's very important to have strong awareness of which side we favor as individuals, and ensure there's that roundedness, if you will, that we're not over preferencing either the left or the right, but working collaboratively and weaving together an effective uh, set of questions for ourselves and our organization. The final point I'll make, and this is very significant, I think, particularly when I consider Loyola, the Quinlan Business School, and Loyola more generally, and that is the value to risk professionals, where you're established professionals or a student or a new professional looking at a career that focuses on risk management, compliance, audit, related disciplines, is the importance of cross-disciplinary education. I have at some level woven through this presentation a whirlwind of geopolitics, history, philosophy, human psychology, economics, finance. All of these disciplines matter, and I would argue in the world that we find ourselves in today, to the extent your education offers you the opportunity to take deliberate education in these fields, or you have time as an established professional, challenge yourself to be informed and or read more broadly in these other disciplines. It'll help round out that perspective. We get very good at exercising the muscles that we're comfortable with, and it's important to have that roundedness. I'll finish and certainly look to questions by turning to Kenneth Arrow. He won a Nobel laureate, but one of the founders, if you will, of the Santa Fe Institute, which is known in particular for complexity and complexity science. I commend their podcast, Complexity, to you, to jog that mind and memory, if you will. And this particular quote from Ken comes to mind many times about the dangers of assuming that we can achieve some level of certainty. So I'll close there and thank the Senator Abul for the opportunity to speak, and look forward to any questions from the audience.